Okay, I'm finally back from vacation, and I actually want to go through an old setup because a lot of people don't understand that I define risk on these all the time, and you have to know where that risk definition is so that you can have a stop in place. And I'm going to go over the example in Apple where I started with a setup on the weekly chart, and it worked the last time when we took this prior decline of $45.71 and projected it from this last high, and we did end up holding above this area, and then we did start seeing a shift in pattern, and that's when I was able to give some key upside targets in Apple in the past. But this time when I ran the 100% projections, again I took this swing and projected it from the recent high. We were looking for the possible support at this 187, 189 area. I believe there were also some other key price relationships that overlapped it. But guess what? We initially saw a little bit of a bounce, which I'll show you on the daily chart, but it was not able to clear resistance. So stops were supposed to be underneath this zone if it didn't hold. So don't get stuck thinking that if I put something out that this means that you're still supposed to be long if I gave you a setup around this support. It doesn't work that way. Okay, if you're interested in more of what I'm doing, I've uploaded the guidelines that you can look at, and you can use the zones along with the guidelines, but you have to remember to define risk. So since that area of support didn't hold, I had to look at an alternate way for another possible entry in Apple, and every time that I've tried to set it up, it hasn't followed through, and there haven't been the indications that we should go back in it just yet. Because initially, when we held the support that we were looking at, basically you were not able to rally for more than these prior rally swings. And once it did that and failed, you were supposed to ratchet up stops or have a stop, underneath that prior swing low or where the support was, right? So what do you do next? Actually, I do the same thing that I've been doing for a while, is I take all of these prior rally swings and say, well, if this is going to start showing some strength, we need something to happen. We need it to rally for more than all of these prior rally swings. And if it doesn't, you have to be prepared for failure again. So here, a couple of weeks ago, we did have a zone of support. It did give us at least a short-term rally, but we were once again unable to clear this resistance. Okay, it rallied, let's see, from that low to that high. Okay, that was a rally of $14.68. So, was it good for a nice little counter trend rally? Yes, but was it good for a major low? No. So we're going to do this once again. We're going to look at running all of these prior rally swings from any new low that's made. And you can look at a counter trend buy in Apple if you want to against support and just risk underneath it. But the safer bet's going to be waiting for a true pattern shift. To go from the pattern of lower lows and lower highs to finally let's see something, that's higher highs and higher lows. You're not seeing that yet. So yes, you can still look at a relatively low risk entry with defined risk with a counter trend trade in Apple if it holds one of these areas. But as far as the bigger picture, I can't look at it again for a long-term hold unless it can, again, shift patterns. So hopefully that helps give you an idea of what you do when something doesn't hold your zone. First thing is you get rid of the position, and second, you look for either a new setup to take a decision against, or you wait for a shift in pattern that tells you that this has run its course on the downside. And right now I don't see that it has. So I'm going to keep watching both sides of it. I'm going to look for possible bounce from this area, but not going to get real excited about it in the bigger picture unless we can clear the bearish symmetry of this declining swing, and obviously we'd like to see some buy triggers on a lower time frame chart.